All right, we'll get started here. So thanks for coming. What is your name again? Danielle. Okay. So Danielle, Rochelle, you guys all know each other. Carson, Chris, Steph, and Andrew, Drew, Tony, Mike. So just wanted to talk with you a little bit today. Who do we have on? I guess I don't even know if I can tell. Who do we have on Zoom? We have Angel, Sean, and myself twice. Okay. Hey, Sean. Hey, Angel.
Hey,
All right. So wanted to go through this content with you. We'll also do a bunch of question and answer type of things. So it's more casual format, but how to run your business like a business. So, a lot of this came to me by way of learning from other people, right? So happy to teach it to you guys. We've been on this for 11 years this August, and for the first couple years we kind of just signed up with Keller Williams, gave them our routing number, and like when we sold a house, like it hit our checking account, and we're like, cool, we got extra money, right? And that led to like frivolous spending, right? Because we were both working at the time still, right? So when you have that blend and you're like, oh, I got a $10,000 check, like you don't think twice about like going to dinner or going on vacation or buying the next, piece of clothing or whatever. But the reality is we are business operators. So we need to run this like we run a business, right? If you ran a business like at the car wash or Keller Williams or, any business, you're going to have a budget, a profit and loss, and the company is going to bring in gross income and then pay its employees, right? So, probably about 6-7 years ago, we changed that and we got an LLC, which we'll talk more about. So today, what that looks like is Keller Williams pays my LLC. The LLC's name is Synergy Real Estate Group. No one would ever see that except for my accountant or myself, because we're not able to advertise LLCs in Pennsylvania. We have to advertise our licensed name. But from a bookkeeping perspective, my LLC gets paid, and then as the owner and an employee of that LLC, I can decide the arrangement on how I get paid from my company, right? So otherwise, you're literally giving all the gross income to yourself as the employee, and where do the expenses get paid from? And that's when you hear things like, I've had agents say, oh, I'm not getting professional photos taken unless that one doesn't sell, like when the market was hot. I'm like, what does that mean? Like, so you're not going to spend $150 for a chance to make 10,000, so you start to make bad decisions because you're spending the money as if it's already your personal money, when it should be the company's money. And the company should have a strategy that when we bring a listing to market, we get professional photos and we market it a certain way. And you're not thinking of it as spending your own money. It's like, this is a necessary byproduct to provide the right customer experience to get the next customer. Hey, Mona. The problem is that most agents don't know their numbers. They spend first and save what's left, if there's anything left, right? So in my example, think about it. Karen and I were both employed by Verizon. So we had, 4 paychecks a month going in there, a couple sales in the beginning. All of a sudden you're like, oh, we have money, we can do whatever. And then my checking account got super noisy because all the deposits coming in, all the transactions going out, whether it be groceries or movie tickets or Zillow ads or whatever, like there's just a lot going on, where at the end of the month, it was hard to delineate, like, how much money did we make, or did we even make money this month, or did we lose money? So, you need to really kind of separate those two. There's a personal life and a professional life. And then you can get crushed at tax time, right? I know there's 2 huge agents in the marketplace that both. Somebody on Zoom, can you mute yourself, or can I? How do I mute everybody? Who's making that noise? Let's see. Everyone's muted now. Thank you, Lori. Hey, Lori. Hey, Letitia. There's 2 agents that I know of, so probably a lot more, that do big businesses. Like, one does triple what I do, and they owe money to the IRS, right? Like, because I know that, because when they've shopped around to potentially come to Keller Williams, they're like, hey, other people are helping us to offset our IRS tax lien, right? Because some of these people, their business is based on Zillow, and they're spending tons and tons of money on Zillow, and they're not really doing this math to say, am I making money? Like, the last thing I want to do is sign up for Zillow leads and have to go around showing buyers of houses on their terms, nights and weekends, and not make a profit off of it, right? Like, so, but some people get caught up in the success or the perceived success that I sold another house. I can post it on social media. We sold 200 houses this year. Well, you didn't make any money. You know what I mean? So like, it's like, what is your objective here? If you just want to look like you're successful, that's one thing. But if you actually want to be successful and get further ahead financially, then you need to look at the numbers. That's a piece of it. So the goal of this class is to have a better understanding of a P&L, know how to pay yourself, and have a system to follow each month to kind of reconcile and run a report on yourself. So example of that is at the brokerage here. Many of you know that Dave Hook and Matt Madden are investors along with me here at the brokerage. So I do a financial report to them every month, right? Second Wednesday of the month. It's like, hey, this is how we did. This is how it compared to what our forecast was. This is what I see for next month, right? That's how any business operates. That's backed by somebody with financial skill, right? Because you need to know based on seasonality trends and if you're growing, if you're shrinking, where you're going next. So a mindset shift that's necessary there is I'm not just a salesperson getting paid. Like, right? I didn't go out and get that $10,000 commission check and earn $10,000, right? I'm the business owner. I just happen to also be an employee for the business, right? So the business made $10,000. Just like when you hire a plumber to come out and change out your toilets, right? They charge you $300, but the plumber didn't get the $300, right? The plumbing company got that. And then they have an hourly rate or like a piecemeal arrangement with the actual employee. So we have to think about, budgets and things like that. So how money flows, or how it should flow, is you get the commission from Keller Williams. It goes into a business account. The business then pays the expenses, of which your pay, it could be an expense. We'll talk about that, or maybe it's not, and you just take the profit later. But then that equates to profit, taxes, your income, and then ultimately wealth building. A lot of agents, skip the structure and you lose control. So that's kind of where I was back then, where like, oh my gosh, it would make my heart race to even see my bank statement. I'm like, debit, you got a nickel to use your debit card at Members First back then? I was getting like $4. I'm like, wait a minute, I used the debit card 80 times. You know what I mean? Like it was just a little haphazard. So having that structure and separation was valuable. Aaron just got an LLC for this year, right? So he's right there in the mix of this. Who has an LLC right now? Your LLC is paid by Keller Williams?
No, I set it up, but I'm not actually doing it. I'm still just taking my paycheck.
Okay. Have you had
desperately trying to pay everything?
Have you had a settlement yet in April?
Yes.
You already got paid.
March 31st.
Okay, because like a good time to do that would be obviously January 1st. If it's not January 1st, you could do 4/1, 7/1, 10/1 for the quarters from an accounting perspective. But anybody else have?
I have an S corp.
Are we paying your S corp?
Yeah, I pay myself payroll.
Okay, and you do too?
I have an S corp, but it's not this business. I haven't
for the other. Okay. But you're familiar, obviously. So an example of this is, think of it as a funnel, right? So $10,000 commission check, just a round example. Think how much do you pay yourself? In this example, it's $2,500, which we'll come back to that. It doesn't sound like much, but if this agent was at a 25% split, right, they would get $2,500. Expenses of the business might be $10,000 or $2,000 to generate that sale. You put aside money for taxes, and the actual take home for the business is $3,000. But that just kind of shows you the flow of money. But we'll get more into detail in a minute. Hey, Tatiana. So what is a P&L? So obviously stands for profit and loss statement or income statement. It's going to show your income, your expenses, and your profit. So think of it as your scoreboard on how is the business doing. Yeah, I can send it to you. Yeah. You don't have to take notes so Keller Williams talks a lot about the 30-30-40 model. So they believe that an efficiently run team should be able to net 40% before taxes of all commission income. And believe it or not, that's after paying like yourself or like an agent if you had a team to work for you. So 30% would be lead generation or cost of sale. 30% would be operating expenses, and that would leave 40%. Dave Hook says this is a big stretch. His team operates at like 36-37% profit margin. There's only a couple teams in the country that Gary Keller has a top 200 group that he personally mentors. Dave Hook is in that top 200, and most of them aren't able to achieve this. So it's a little bit of a stretch, but if Dave's at 36, 37% in a local market like Carlisle, it's obviously fairly achievable. And then this little chart here shows you just a breakdown of how you would look at that, but I have more detail later on. So what is cost of sale? So if you wanted to keep cost of sale to 30%, an example of that is things that actually drive business, right? So your Zillow leads, PPC is Google pay-per-click advertising, mailers, photography, client events, referral fees, basically your marketing, right? So that's 30%. So for every $10,000 you generate, it probably took you $3,000 to bring that sale in. Now, some of you are very different than this. If you tend to operate like from your sphere, mostly like Kim Hivner, right? Like Kim Hivner has almost no expenses because she has just been around this area for a long time. She gets leads from bowling. She gets leads from her Princess House days, from her past clients or whatever. So like this is looking at someone that actually operates probably a small team or an individual that has to market to get business, right? Chris, you're a lot of sphere, right? You probably don't have the same level of expenses, but that gives you more of an opportunity to have profit at the end. Operating expenses are the stuff that supports your business. Like if you have an admin, your Bright fees would be in there, your office fee, gas in the car, any kind of systems that you have, showing time, CRM, you're probably not paying outside, but commands included, right? So that'd be your monthly fee, things like that. And then the profit is basically what that business made before you as the owner got paid. So that would, you'd have to have taxes taken off of that and other things. But think about for every dollar that you want to earn, you basically have to gross 2.5 times that much if you wanted to follow this model. If you want to make 100 grand, the business would have to bring in 250 because 40% of 250 is how you get to 100. And this, like I said, can be tweaked. Your personal budget would dictate, exactly the percentages that you need to target, because like I said, Chris might be very different. Say, hey, I only spend, if I gross 200 grand, I only spend like 30,000, right? And then that would only be 15%. So that would give you the opportunity to probably net over 50%. So the first 3 systems that you need is, a business checking, a tax savings account, and then a personal account. You all obviously probably already have personal accounts, right? But before you can get a business account, you have to form an LLC. So you can do that directly through the state for probably $200. It's like 130 for one and 70 for the other filing. Or you can go through like LegalZoom or whatever to do it.
Don't go to the
Why? Expensive?
They are a pain in the ass to get rid of.
Okay.
Yeah, I helped one of my buddies set up an LLC, and he wanted to shut down the LLC like 2 years later, and it ended up costing like 50. It was, don't use it. Use the state.
I will tell you, if you can do it directly, and probably with ChatGPT, you can more easily do it directly. Just like, how can I form a business LLC status in Pennsylvania, right? It'll tell you, probably give you links.
I just asked my CPA and she just gave me the links as to what to do.
Yeah, so it's roughly $200. And now the government, Pennsylvania, employs offshore, like data entry people. I had somebody buy a rental property and they formed an LLC. They got it back like the next day. Like, so it used to be that you had to mail it in, wait for the stamp to come back and all that stuff. So you have to form an LLC. So the bank, if you go to Members First or Fulton or whatever right now, they're going to ask you for your origination documents, your EIN, which is instantaneous. You just go to the IRS website, you put in your information, and like a minute later, you have an EIN. That's employer identification number. But you need the operating agreement and the certificate of origination from the government to open a bank account. And then that's all you need. You would literally come to Robin, say, hey, I want to start getting paid as an LLC instead of as my person. And you give her like the federal tax ID number and the name, and that's it. Then your deposits would start coming from Keller Williams to your business bank account. Then you'd also want to start changing over like any deductions, right? Like your showing time, your Bright, your KW fees and stuff you would want. Now you'd also have to fund that account. Like if maybe it's $1,000, how much do I have to transfer from my personal account to get the business started, which sounds crazy in itself, right? $1,000, if that's even an example, because if you're opening a car wash or a restaurant or sneaker store, right? That number has to be a big number. And that's what people say, the cost of entry for real estate is so low. That's why we get a lot of part-time people. We get a lot of people that don't take it seriously, because you can get your license for probably $300, and then costs a couple grand a year to stay licensed, right? With your renewal and your fees and everything. But that for the opportunity that presents yourself, that you can literally make 6 figures or 7 figures doing this, like that's more potential than somebody opening a restaurant, right? Like if I want to open up Babes right now in Palmyra, I would probably need $1 million, either of cash, or I'd have to go and sign my name to a huge loan. It's going to cost $6,000 or $8,000 a month. And if I don't make it, I'm bankrupt, so the opportunity that real estate gives you for the risk and time that you put in is far superior than most businesses. So, and our profitability, right? Where like someone like Chris, if he gets a lead from his restaurant days, it's a $10,000 commission. It might have cost him nothing to generate that sale. And if you're in the shoe business, right, probably roughly a 50% markup. You buy shoes for $80, you sell them for how much?
Like for example, like we shop for 10%, like after everything.
Total EBITDA at the end. Okay.
After everyone's paid,
yeah. So we have the potential to make 4x that, 5x that if you do this right. So that's a huge, because we don't have the mall rent, we don't have the payroll, we don't have all the insurances and stuff that an actual business would need. So real estate's a huge opportunity for a lot of people. Like I couldn't go out and make anywhere close to what I make being employed by anybody else. Like if I did, it would be something hardcore like pharmaceutical sales, or even doctors. Sometimes we get an offer letter from somebody moving to Hershey Med, and I'm like, granted some make a lot of money, right? But an entry-level doctor might make $190,000 a year, and you're like, really? Like, I mean, there's a lot of agents in our office that make that without having gone through 4 years of undergrad, 3 years of medical school, and probably 3 or 4 years of fellowship. So it's just a huge opportunity for us. So every commission split, you have to figure out, what do you call it, Aaron? Buckets? You have buckets basically. So when a commission check goes in, it hits the business account, and then what do I do with it after that? So right now I pay myself and Karen as if we're team members on the team, right? So I don't pay myself what's left over. That's the business's money, right? So I might only pay myself 40 or 60% of the commission, right? The gross commission on that sale. And then at the end of the quarter, since I'm the business owner, I have the luxury of saying, okay, now the business has a profit. Do I want to distribute any of that to myself as the owner, right? So what I've done is just adopted a rule of thumb where, like, I have a lot of expenses, right? We'll get into that, but I want to keep $100,000 in my business account, right? So like I'll distribute anything above $100,000 as an owner dividend, right? Because that's the number. We spend roughly $25,000 a month, right? I want a 4-month cushion to always have, and that number got really low over the winter. Like we had a slow fourth quarter. I was down to like $20,000 in that account. I was like, holy crap! And I can see the emotions that everybody has in this business, right? Because you would say, oh my gosh, you sell so many houses. We average about 100 a year, but I was worried about sustainability just 6 months ago. You know what I mean? Like so. So you have to plan for things like that where you can't predict like the seasonality and the Iranian war and interest rates and things that might happen. But what I do currently is my tax bill last year worked out to be just about $1,000 per settlement, right? After all my other deductions and everything. So now knowing that, literally the first thing I do when I get paid from Keller Williams, I transfer $1,000 from my business checking to a business savings that's called tax withholding, right? Because I want to not be surprised at the quarterly or year-end filing with a big bill, right? Like I had to write a check for $52,000 last October, right? Because I filed with an extension, and that wasn't fun going into the fourth quarter. That's kind of why I was depleted on cash or whatever. But basically, that's where they say pay yourself first. You need to get rid of those guaranteed expenses before you spend the money like it was yours. So $1,000 from every settlement, your number might be more, right? If you have less deductions, it might be less. If you have more deductions, but right now I'm pretty confident if I put $1,000 from every settlement, I sell 100 houses, I have $100,000 in that account. I would have probably trued it up quarterly, but that should be on track. And it should occur at the same time as it's due because it's based on the settlement, right? So if I just act like that money was never mine, it was never even my LLC's, it just 10,000 came in, 1,000 over, now I got 9,000 to work with, I can rest assured that I'm not going to have a big bill from the IRS at the end of the year. So that's been valuable for me, just figuring out what those numbers are and how it works. Now, the unspoken thing here is like some people have to survive, right? Like you have personal expenses. So it's like, how does that work when like you finally get the commission check and you have to pay your mortgage and your utility bills and your car payment, your car insurance? Well, the answer probably is you're not making enough income. You need to sell more, or you need to get additional income from somewhere else. Doesn't sound fun, but that's when you have that dual career, right? Somebody's out there waitressing or driving Uber on the side or whatever it is, because, this business can only sustain if you follow the model, so until you get additional sales, might not have enough income to get yourself as the employee to the right amount of income that you need for your household. But you can also get more sales, right? Like you can do it fairly easily. Like if I had a proverbial gun to Aaron's head and say, go get one extra incremental sale in the next 2 weeks, he could do it. You know what I mean? Like, because he has that motivation, whether it be door knocking or cold calling or whatever. Now it might not settle in 2 weeks, obviously, but he would have it settle in May or early June. So for the amount of opportunity that we have, that our average check is now over $10,000, like it's big business, right? You can be at the next happy hour talking to your sphere, right? Provided you don't just hang out with realtors all the time. But obviously they're not going to buy a house from you. So stop hanging out with Orta. But if you're out there telling everybody loud and proud, I'm a realtor, like do you have any friends and family, you do the Ford questions, like you just get closer in relationship with people. They say that when someone goes to transact with a realtor, you either need to be the closest realtor that they're in relationship with or the closest in proximity. What that means is you either live near them, work near them, or you associate with them. We're in the same circle, right? So I need to be the one that they think of when they go to transact. Otherwise, there's too many realtors out there where you won't be their top choice. So what I personally use is Quicken. And actually I got this from Michael. So Quicken is like QuickBooks. I think they're competitors, but it's about $130 a year. And I can show you what it looks like. You sync all your accounts, like your credit card, your savings account, your checking account. And when you log in, you just like sync it and it goes and pulls all the transactions. And then you categorize those based on what the expense was, and it learns. Like, it knows that Supra is Supra and it puts it in the right category. It knows that $105 from KW is my KW monthly fee and it puts it in the right category. If you, do something abnormal, or like the one thing it doesn't learn for me is like, if I go to Sheets, it doesn't know that a $6 purchase is Red Bull and a $60 purchase is gas, so I have to correct it a little bit, but with like 10 minutes of work a week, my financials are up to date all the time. I usually do it on like Sunday morning. So I'll show you that in a minute. Alternatives would be QuickBooks or just doing it manually on Google Sheets. I built my mom a Microsoft Excel sheet like 10 years ago. She uses it to this day, right? Even though there's other programs, she just likes that because sometimes that simple act of reconciling, inserting a row and entering it either holds you more accountable or it just keeps you more just sharp with it in your mind. So here's an example of mine. What's that? Like weekly. Yeah, usually. I got behind a little bit here recently, but it doesn't really matter with Quicken. Like it just gets more overwhelming. Like I populated like 30 days at one time. And what I did then is I just sort by like the merchant and I update them all at once. Like when I get the sheets, like I buy a lot of Red Bull, right? So like I get the sheets and I can just literally go through them real quickly because they're all sorted by sheets. And then the next one is, Supra. Well, there's 2 months of Supra, but that's easy. You just confirm the selection that it made for you. So this is how mine looks. Like I said, Synergy is the name of the company. So this is the money I have coming in. And I separated that obviously into buyers and listings and transaction fees and even referrals. And then my expenses, right? Keller Williams broker fee, KW shares, donations, the split that we pay, things like that. And then you get into the expenses, which I got a little bit specific on the categories, right? You can be more generic, but I wanted it to be specific because I want to look, if I look back and say, was that thing worth the $2,200 last year? I don't want to have to do a lot of manual digging to find it, right? So like subscriptions here, ChatGPT, right? Paid version, $20 a month. Emma is an email service that I subscribe to for like newsletters and stuff to send them out, I should say. Follow Up Boss, Paperless Pipeline is a transaction to close software. Posh is an answering service. So like if you call me, there'll never be a time where somebody doesn't answer the phone. It'll route to Karen, Aaron, and I simultaneously if none of us are available to answer. I have a live human US based that answers and actually answers on my behalf. Hello, you've reached Steph with Team Becker Realtors. How may I help you? And then there's a buyer and a seller path that they would go if they, based on what they say. Why are you calling today? I want to sell my home. Okay, what's the address? What's the approximate value of your home? How did you hear about us? What's your timeline, right? So then that information comes to me after about 5 minutes when they type it in the form. And now I have that information to call the person back. They've been acknowledged. I don't miss them. Some people will just call the next realtor. And I have the answers to those questions, like how soon do you want to sell? Next 30 days. Well, that's a hot lead. And then how much do you think your home is worth? That's super valuable to know because they're going to forget they told that person. And I'm going to have the listing appointment and be like, oh, they said 420, right? I'll go in there with a range. If it makes sense, so 390 to 430, be like, yeah, you're right in the middle of the range, right? It adds credibility.
You're not getting a recording of that, though. You're just getting it's listing it down.
I'm sure there's places you could get a recording from, but yeah, I don't hear their voice, but I see the answers. Yeah. It's paid, yeah, roughly. I think I'm on like the $135 plan, so with taxes, 142, but it doesn't have to be that much. There's tiers. It's based on how many minutes of the person's time you take at the answering service, because they answer for all kinds of US based companies. So I think it's as cheap as $70. That might be pay per minute, which Aaron will tell you, I've gotten annoyed before. I'm like, we need to answer the phone because we're paying like $3 a minute for somebody to answer the phone on our behalf. But there's been times where it's literally gotten us sales, right? Because I don't know that that person would have left a voicemail, or I don't know that we would have gotten back to them as quickly, right? If it's somebody that says I need to sell my home in 30 days, even if I'm at an appointment, I might consider saying, hey, can you give me 5 minutes? I'm going to step out real quick, call that person back, say I'm in an appointment. I'll be able to call you around 7 o'clock tonight, because the acknowledgement is 3/4 of the battle. If they don't hear your voice and know that you're going to get back to them, they'll just call somebody else. They don't have a whole lot of loyalty to us until they meet us or talk to us. And then other things like, SEO, website, get better rankings, Google pay-per-click ads, things like that. But this is just an example of a P&L. So here, just at a core, right? Like in January, we brought in 38,000. After like the cost of sale components, we grossed 24,000 as a company, right? And spent 23,000. Like I only made $1,000 in January, but I did pay myself and Karen and Aaron for our sales, right? That's the company didn't make anything in January, but that's kind of to be expected in January, right? But then it quickly ramped up to where the company, after paying the three of us, made 30,000 in February, right? So we go from, and we grossed right around $1 million last year in commission, right? So the 40% rule would be that we should net 400,000 after those expenses. Like I said, that's a little aggressive, but we're in the ballpark of that. Depending how the summer months go, there's big months where this is highly contingent on like June, July, August closings, obviously, because there's months there that we have 10 or 15 closings. That makes a big difference if you don't hit those months. Anybody have any questions on like the layout of this or anything? So let me just show you real quick how it works. This might be it. Yes. So here is what Quicken looks like in Quicken. So if I go here to, God knows what you're going to see, so bear with me. But if I hit this update button, you'll see that we have a dining out problem. It takes a few minutes. Right now, it's talking to my credit card, my bank, everybody I do business with. It's going to pull in the transaction. So this is like a one-time, once a day, once a week, once a month, however often you reconcile exercise. And to the most part, I don't have to log into the accounts to do anything, right? I still do need to transfer money or whatever, but this is pulling all the transactions. So you can see successful connection. Next step is accounts updated, and then it'll say new transactions downloaded. It might take another minute or so. But over here on the side is all the accounts I have linked, right? That it's going to pull information into. And you can see this little status bar here circling. And you don't have to use Quicken. You don't have to use anything. It can literally just be Excel with a CVS file exported from your credit card. It depends how complex you are, right? I'm certainly not going to go into 15 different accounts and pull spreadsheets and try to consolidate them. So for me, the $130 or whatever a year is worth it. Looks like it's almost done. There's some errors there, but no, I use just Excel or whatever. Yeah. So here are my new transactions that populated. So now this is personal and business. Like I could look at just one or the other right here, like all business accounts. I don't even see it, but like, so here, if I just go, okay, forget that for right now. But here, like this is Google Ads, right? $500. This is a life insurance policy, right? So then I need to go through, and you can see it's recommending the category for a lot of these, right? But I just need to confirm it. Like Speedway, it says morning drinks, right? That's what I called that category, 530. That obviously isn't gas, right? So I can go in there and hit reviewed, and that's going to put that in that bucket. I got new swim trunks, so I lost some weight. So like you're just going to go through late fee. I don't know what that's about. Okay. Okay, Chris. Yeah, I'm stuck on a late fee. I don't know what that was. I gotta look at that. So before you do that, you should develop a budget, right? So this is my budget. This is just Google Sheets. Every month of the year before the year started, it's like, how do I expect the year to go? And that starts with like, how much do I expect to sell? And at what average sale price and at what average commission rate, basically is how you would generate, the income. And then how much do I expect to have in expenses? And then at the end, you'd obviously do the math and say, okay, if I take, the income off the expenses, like I only forecasted to make $3,000 or $2,500 in January, right? I forecasted that we would bring in 21,000, spend 18. So that would net about 2,500. The number was like 1,000, right? So I was off, but not off by a ton. And you can see that we expect, obviously better months, in the spring and summer. That would be more, and you can see that up here in the top line revenue, right? Like January, February, March. So like May, I'm expecting to be our best month for settlements, right? But then not far behind would be April, June, July. So, but this is obviously never going to be perfect, right? It's just a guesstimate, but the more you've been doing this and the closer you are to the knowledge and the transactions, the more you can make a better forecast. Some of these are straight lined, right? Some of them are like the KW 105 is literally going to be 105 every month. So that one's easy, right? But other ones are variable, like if you pay for a transaction coordinator, it might be $350 per sale, right? So then you need to say, okay, that's going to be based on the 5 sales in January. So that expense would be $1,750 in January. It might be a lot more in August because I have more sales then. So, but just to get an idea of how that looks, you can see in there, I basically flatlined the customer appreciation events to be 20,000 a year, but I don't spend it in the fashion of 1,650 a month, right? I usually do those quarterly, but it's the same idea, just to kind of make more consistency out there. And then ideally at the end of the month, realistically, probably every 2 or 3 months, just look back and say, and obviously I'm going to look at it more if times are tougher than if they're prosperous. You know what I mean? Like if it's tight, it's like, okay, if we had to cut something out, what will we cut out? Right. We just recently made a change and dropped Zillow, but I increased the Google pay-per-click advertising. There's some tweaks in there. Sometimes stuff works better at certain times of the year. I used to do my big client appreciation event in September, October. And then based on a training I was at, I'm like, they said, that's dumb, right? Because you're going to get exposure to all your past clients going into the winter when people don't transact, right? So I moved that to March. So you can be closer in relationship to them in March ahead of the buying and selling season in April, May, and June, right? That was revolutionary. It might make me 2 or 3 more sales this year just because we had it in March instead of October. First of all, it's 7 months earlier. Second of all, it's the right time of the year. And that was just like a little nugget that I hadn't thought about. I was just like, I'm going to do it when I'm slower, but I don't want to do it when I'm slower because I'm not going to get busier in December. December is going to kind of crumble as it does, right? But in March or April, I can make myself busier in the spring or summer. But who do I do it with?
Yeah.
My direct, myself. Yeah. I'm in the process of switching to Phil Pasma. Do you know who he is? He's a Canadian guy. He's like known as like the top pay-per-click guy in real estate. He won't take me on though because of my website. I use Luxury Presence, and Luxury Presence is unfriendly to Google search. So like that actually held a lot of weight with me. He's like, literally, I won't take your money until you get the right website, which is Sierra Interactive or Real Geeks, because I can't get you the results.
What I was wondering, if it was the Real Geeks.
Yeah.
Typically, why run it?
and Dave uses Sierra, but to me, that was like, okay, that's cool. You're going to turn me down as a customer. I mean that, I'm not saying that sarcastically. I like the fact that you're not willing to take me on because you don't think you can help me as much as you should, because that means to me that you're committed to helping me, so we just have to change our website to be able to do it. So hi Daniel. Monthly process. So every month, Tatiana, reconcile your accounts, review against your actual budget, adjust your spending accordingly if you're not on track or if you're off track. Now I would say, what does adjust mean, right? If you missed your plan and you didn't make as much money as you should, or you lost money, does that mean spend less? Maybe. Spend less frivolously, right? But maybe it means spend more in certain lead generation activities, right? Because you have to change the outcome. What's that, folks? No, it's my phone's connected to my, yeah. So 30 minutes can really change this. Instead of getting behind and, you're learning some of the stuff with your tax appointment or whatever. It's like, hey, if you do it proactively, you're going to know this stuff before you get surprised by a big tax bill. What I will tell you, right about the time that we separated off and had a separate business account, to me, sustainability in real estate was very important at the time. We were still both working full time. If you know anything about our story, Karen went full time into real estate in 2018, maybe 2018. They used to work together. That's why I'm pointing at her. 2018. So we got to the point where we're selling 100 houses a year while still working full time. And then about a year and a half later, I quit right before COVID, like in July of 2019 or something like that. But that was a big step for us because, I had a very good job at Verizon and great benefits. It was a good company until it wasn't. And then, but to not have that every other week paycheck and the health insurance and things like that was like, okay, we got to figure this out because we did have a mortgage and 2 young kids at the time and things like that. So when we first got into real estate and first started treating it like a business, I just made the commitment to pay $1,000 principal to our house with every sale, right? So I was doing the $1,000 tax thing and the $1,000 house principal buy down. So 2,000 coming off the top, and the average sale price was less, right? We didn't have a whole lot left over because we were buying Zillow leads and stuff like that. So I wasn't really making a whole lot of money doing the real estate thing, but it was helping to protect like the future, right? So we paid $390,000 for our house. We put 5% down, right? We didn't have money in 2016 when we built our house, right? So we borrowed $370,000 and change to buy a $390,000 house. About 4 years later, we were able to pay off our house, but just that $1,000 maneuver, right? Because you hear about that compounding effect of that, right? If you put $1,000 principal in your house, at the same time, I had like a 3.5% interest rate. So it was paying down on its own, but every month with every payment, you're paying a bigger chunk to principal because of that $1,000 the month before. And it just keeps compounding. So that to me made us more bulletproof because our mortgage payment, it was lower because of the sale price and the interest rate, but it was $2,300 a month, right? To eliminate that expense along with paying off our cars and stuff like that, I'm like, okay, we have a great chance of being sustainable in this business because we have low overhead at that point. So now the business itself has high overhead, but personally we had low overhead. So my business is very different than yours, right? Because when we first got started back in 2015, we were new to Palmyra. We only moved to Palmyra because it was middle ground-ish between Karen was living in Lebanon. I was living in Carlisle at the time. If you say that, I was living in a hotel really. But so Palmyra was like middle ground with good schools, right? So nobody in Palmyra knew us as real estate agents because in the beginning we weren't. And then we got our license and then we couldn't really talk about it because we were both actively working for Verizon. That's kind of frowned upon to be like building another business on the side. So we had to get our business through paid sources, right? So in the beginning it was Zillow and then doing open houses, right? So the two of those were our biggest lead sources. There was a time I was spending 12 grand a month on Zillow, right? Because it was working. Leads were $100 a piece then. We could close one for every 20 leads. Like it made sense. 20 leads times $100, $2,000 to get an $8,000 commission. It worked out. Now they're very expensive and you have to be willing to really nurture them and go out and with the NAR rules, like it's a little bit different, right? And then open houses, I would argue for the biggest return on your investment. We had Karen's kids like every other Sunday. So we both do open houses on the opposite Sundays when we didn't have them. So 2 open houses every 2 weeks is essentially 1 a week, right? So we did roughly 40 open houses a year with some vacations and stuff. And we would get like 12 customers a year from open houses. She just got one a month ago, right? They're under contract now on a $400,000 house just because they connected with Karen at the open house, right? So for that time investment, the cost is zero, right? I mean, maybe some flags or whatever, but that's a one-time expense. But to get up and get ready and get dressed and print your flyers and go out to that open house from 1 to 3, you're probably going to have to allow 12 to 3:30, right? But for 3.5 hours, 40 Sundays a year, you're working roughly 150 hours to get 10 or 12 sales, right? That's a huge return. Like you're going to gross $100,000 by giving up every other Sunday mid-afternoon, right? Like, so for people that don't do that, they're kind of crazy. Brandon Confair did an open house for Yvonne's listing in like Gettysburg, sold that house to the buyer that came unrepresented to the open house, right? So that Sunday afternoon, he made $12,000 by sitting there for 3 hours or 2 hours. So, and in the beginning, it wasn't our listings, right? Our first ever open house was Sherry Enterlines. It was in Edders, like the streets are like wine streets. It's like those townhouses are like 150 grand behind Walmart. Yeah, maybe and like we went over the top with it. It was our first open house. Like looking back, it was silly, but we got like little bottles of wine and like sodas, and we had like cookies and like a fruit plate, and like 2 people came. But like we went out the day before and knocked doors and stuff like that. We got no business from that sale, but in the course of it, we've done very well with open houses, and also just getting another notch on your belt, right? Getting a buyer at an open house now gives you the social media content. It gives you the ability to circle prospect and say, hey, I sold your neighbor's house. It gives you another client to potentially get referrals from. Like that can compound very much. I would say that the reason why we are where we are today is probably because of Zillow and open houses. Even though we don't do much of either one of those things now, it gave us a bigger black book of business, right? I used to get very envious of like the Dave Drobnocks and Judy Stovers, like the legacy of Patrick Smiths of the world, right? Saying those people their phone just rings. They're like, hey, you sold my dad a home back in 1995 and he said to call you. Like that never happened with us in the beginning. Everything we got, we had to work for. Or pay for with Zillow leads or Google or whatever. And eventually it got easier, right? In the beginning, I had to pay thousands of dollars to get my phone to ring. And then, I remember probably like the end of the second year, we got our first like, hey, you helped my friend. He said to give you a call. And then the next year you got maybe a divorce and a relocation and like another referral. And then eventually I would argue that today we could stop all paid advertising and we probably drop from 100 sales to 40 or 50. But I'd probably be more profitable, but that would probably dissipate over time. Like if they didn't see you in the marketplace and the signs in the ground and the client events and stuff, it would start to lose momentum because they wouldn't feel the connection that they have today. But just like I said, with Aaron in the very beginning, when he wasn't on any team before me or Dave, he was door knocking, right? He got business from knocking on somebody's door cold. I did that once. We did it at the neighborhood Georgetown, across from Texas Roadhouse. And like the 10th house, we had door hangers made, everything. The 10th house, we got kicked out and they're like, there's no soliciting here. I threw them in the dumpster and we went to lunch. Like, I'm not going to get yelled at by somebody, right? Like, but we didn't know what our niche was on how to get business at that time. We had to figure it out. And Zillow was helpful. Open houses were helpful. And, when you, Aaron has a search, probably Chris does too. When a KW agent anywhere lists a house in your target territory, just reach out and be like, hey, were you planning on doing an open house? If you're not planning on doing one, I'll do one for you, right? We just did an open house on Saturday at our Hummelstown listing, and we had like 10 buyers come through there. Like, I'd be surprised if we don't get a piece of business from them. And 10's the reason if they came in an $800,000 open house, they're probably roughly an $800,000 buyer, right? That would be a $20,000 interaction, just by doing that open house. But any questions on that Rampage?
You set that up in Command?
Do a bright search. That anytime an agent from KW East BR2 is our brokerage code, lists a house in York County, you just get an email. I have a lot of searches set up for myself, like anything from like,
Exactly, is that right? Like,
auto search for yourself.
oh,
just like you would for a customer.
If you go to like
Oh,
clients, auto email, you just like set up an auto email.
And I should say, change that piece at the bottom where you can add and then you enter KW.
Right here, we'll do it. So if I wanted to do that right now, I'm just in a search screen, like a residential sale, right? You could do all property types, but you're not gonna do an open house at a business, right? So you would just go down here. These are all additional fields I added. So you have to click on the add remove to get stuff like this, right? It gives you like, there's a lot more fields that are possible to sort by that aren't displayed by default. But if I go in here, list office code, KW East BR2, I just have it memorized. So right now we have 54 active listings. After that, I don't want to I could do a search and see all 54. But what I would tend to do is do like a search that says like 0 to 1 day. Oh, I'm sorry, not there. On like a listing begins date, right? So this is going to email me like 2 days ago, somebody in Keller Williams took a listing. So right now, if I set that up as an auto search, I would get an email of everything that was listed within the last 2 days, to stay current. Yeah, so this listing is 2 Rose Avenue, Steph Gray, right? Now you would get that email if you did ASAP. You would get it as soon as somebody lists it, and then it would just be there perpetually. You just have to view the email once in like every 90 days or whatever, because like sometimes you go off the body of the email and you don't actually click into it. You got to keep it active. But you would probably put some criteria in here, like I'm not going to do a list open house anywhere, right? But Lebanon and Dauphin County, if it's a decent house from 200 plus or something, right? Now hers got eliminated because it's probably not Lebanon or Dauphin. It's under 200.
139. It's both, yeah.
Okay.
It's under 200.
But at the same time, I could remove the listing date, and now I'm looking at anything that any KW agent here has that's Lebanon or Dauphin County 200 plus, and there's 30 matches, right? So I could email these people and say, hey, look, somebody want me to do an open house or whatever. You've done that, obviously. And then you don't have to do it very long till you get known as like the solution, right? Right now, like we'll just call staff and be like, hey, you want to do an open house next weekend? But sure, because she's already offered to do it for us and helped us out or whatever.
No question. When you do your open house, so I know you said in the beginning you went all out and you brought all this stuff, right? So like I tended to do that and then nobody came, or I mean, obviously my area is way different than what's probably here, right?
Mhm.
So they're definitely like a lot lower and stuff, but like I might have one person come and I have cookies and I have drinks but I'm like, what do you have like typically on like one of these like bigger houses?
No refreshments. I just have one copy of the disclosure. That's the original because I want to get their email if they want a copy of it. I can't give you this one, but give me your email. I'll send it to you. And then about 12 of the MLS one pagers.
And that's it.
Yeah. Maybe utilities, but and a sign-in sheet. Yeah. Sign-in sheet. If it's a nice house or if it's lived in, I try to stay away from that stuff, but here's our sign-in. Here's our sign-in sheet, like just name, address, and we always start it with like a fake person. Karen usually puts her mom and with all the information filled out because they follow the leader.
Somebody taught us to do that in class.
And if somebody skips a field, if the second person doesn't put phone number, just put in a bogus number, put your own number in there, right? Because the next person will probably follow the trend of the previous person. But the open house, I guess, trick is do it quickly after listing it. Like a lot of agents here locally are doing it the first day and maybe even blocking showings that don't happen before. Like, so comes to market Friday, I'm going to do a Friday 4 to 6 open house. And that's the first chance anybody has to see the house.
That's what I have with my.
Now you will have people come with their agents and stuff, and yeah. And the second best time would be like Sunday from 1 to 3. That's just like the standard, like acceptable open house time. But doing it like Mona will do like 1 to 4. I'm like, what are you doing? You want to sit there for an extra hour? Like, I mean, people will come when the home is available. But I think that doing it like on the Friday night or the Thursday evening or whatever, I think that's actually good because I think it gets you a little bit away from just the open house like tire kickers. because some people just do this for fun on Sundays from 1 to 3. Well, those people are probably going to already know a realtor or have a realtor, right? So the people that come specific for the house, and we always sell it to our seller as an advantage, like, hey, we're going to start with an open house because that way it'll cut down on the amount of private showings that force you to have to leave your home. So if you give me your home from 4 to 6 p.m. on Friday, you'll probably have less showings on Friday and Saturday and more time you can spend that weekend at your house.
So you prefer 4 to 6 would be good if you're doing it like a Thursday or Friday, and then a 1 to 3 on Sunday would be like the prime time?
Yeah, we've toured around with Saturday 1 to 3. Like we made a commitment to Aaron to try to keep him off on Sundays, just so he has 1 day a week. But Saturdays don't have the same response rate as Sundays. I mean, now that depends on Eagles football, other things that come into play. What do you recommend?
I've done a little bit of all. I mean, Sunday's a good day. That's, historically speaking, it's the open house day. Yeah, I mean, four for me on a weekday is like a little too early, especially if it's a Thursday and people are like going to
Maybe
work
like a
on
5 to
Friday.
7.
Yeah, but then you start getting too late too. You want to get home,
Yeah.
the dinner, the kids, so it's like playing around with that time during the week. I don't do a ton of like Wednesday, Thursday, Friday open houses. I probably should. But yeah, Saturdays I have noticed is a little less foot traffic.
When we go to like family reunion, there'll be somebody up on stage that their entire business comes from open houses, and they'll do like 2 a day on Friday, Saturday, Sunday. Like that's their lead generation. They're not making phone calls weekday mornings and stuff. But if you think about that, talk about even if you have some that are flops, right? You'll have open houses that nobody comes to, right? Like, I mean, and then you come and you either get caught up on your Quicken or you read a book or whatever. Like, but sorry, real quick. But if I did 5 or 6 open houses a weekend, I mean, I'm not recommending it, just a possibility, right? But that if I'm getting, like in our Karen and I's example, if we got 12 sales from 40 open houses, we're getting a sale from what's that? 30% of the time we're getting a sale, right? So 40 times. So if you did that for a week, and you did it 40 weeks of the year, 160 open houses, sounds like a horrible thing, right? But 30% on 160 would be 48 sales. Like if you just leverage that same, planning, follow-up and everything. The one thing I forgot to say is we have an open house sign. It says open house this Sunday, 1 to 3, that we put in their yard on Wednesdays. That way that if it's not a hot new listing, like people driving by or whatever, they're just going to come back to that open house. And what I would say, I don't know if you guys saw my rant from like 3 or 4 weekends ago. I did some open house mystery shopping, and like the agent didn't have a sign in the yard, no sign at all, like no for sale sign. And then there was like no car in the driveway. Like I felt weird, like walking up to the door. I'm like, I don't want to walk in on. So I rang the doorbell. And eventually she came. I was like, that was weird, right? We don't want the takeaway for our potential client to be, that was weird, right? So whether it be balloons from the dollar store that you put on the mailbox, or open house today sign, or just slide out the rider that says for sale and says open Sunday 1 to 3, just for the amount of time that you're in the house. Like it has to be something that makes people feel comfortable, because like, I mean, I could see people, not stopping, or you want, that's also a chance to showcase your skills as a listing agent. Some people are going to open houses to try to find their next realtor to sell their home. And they're going to be like, hey, I was either impressed with your effort and that's why they call you, or you'll never even know that you were a mystery shop because they weren't impressed. They're like, well, we don't want this guy to do that because it wasn't good.
The sign that you said you put in our open house this Sunday, have you ever put a sign like that elsewhere, like in like a busy shopping center near the property? Or
like directional? Yeah, we had over in Old Stone Way, the one you did, in Palmyra, if you know where In the Net is, it's a high traffic road. I literally had just at the corner, technically on somebody else's property probably, but it's easier to get away with that in the winter when they're not mowing the grass. But for 2 months I had a just big for sale directional pointing back in the neighborhood. And honestly, I didn't do that to sell the house. I did it to get my picture on the main road, because people in Palmyra are already kind of familiar with our brand identity. And it was just an opportunity to say, because of the listing, I'm going to put a sign out here. So our sign was there for 2.5, 3 months.
I was just going to echo the Sunday. I think I get way better results on Sundays. I've actually done Saturday open houses and Sunday open houses. On multiple properties. The Sunday open house.
Well, I mean, there's less soccer games on Sundays. There's
better, or did you do the morning?
So we did, whenever I was trying to figure out like what days I wanted to start open what we would try and do is we would end up having the first open house be the day that it goes live, obviously. Not the neighborhood, you try to do like a twilight open house, all that stuff, but yeah, Sundays Sundays killed it. The Thursday open house is like, Julie Hess kills it with the Sunday, or with like Thursday open houses and stuff like that, and I think Shannon Foster does too, but everybody else I've ever talked to, it's horrible results for it, so I always end up going Sundays, but I did want to ask you, do you ever do like an open house every day, like Joy does, or like?
We have it, yeah. So what he's referring to is, so when the signage, yeah, so we have our regular for sale sign, and then right beside it, we put open house every day. And Dave Hook actually has a third sign that has like text for more information. But the idea, for some reason, people call the open house every day sign much more often than they call the actual sign, because they're not, in that moment, they're not trying to get a realtor, right? They don't want to be sold a real estate relationship. They want to see the house, right? So open house every day, we'll get calls. It'll say open house every day. And the crazy thing is, when they call, they're usually in front of the house, right? So you can say, oh, well, let me tell you about that. The sellers agreed to same day showings. You're probably in front of the house right now. I'm in Harrisburg, but let me check on their availability to get you in there today, right? And you're basically just scheduling a showing, but it's just the psyche of getting the phone to ring more often. It feels like I'm not calling a realtor, I'm calling for a showing, you know?
How do
But
you get there? Like, I mean, so yours would be the one showing it, or is your seller showing, like?
no, one of us would be, you just say, well, I'm not available. I know open house every day. What's your schedule? I can't do this evening. I can do tomorrow morning. Just schedule a regular showing, you know? But
That's what new home construction does all the time, is the open house every day.
yeah, the temperature of the property, eventually you'll learn, like, this is going to be a hot property, right? This, the neighborhood, the price point or whatever. There's certain times where like, we're going to get killed at the open house, right? There's been times where I leave Karen, we're underwater, and I go and print more brochures and come back, right? Because you got to have something, but I don't want to go there with 30 brochures and throw 25 of them away, right? So I usually start with like 12. But open houses, and we're very subtle with our approach in the open house. We just kill them with kindness, let them look around on their own, try to strike a rapport, ask them where they live now and stuff. And then eventually give them a card, or, hey, I'd be happy to stop over, give you a free home evaluation. Honestly, I don't call anybody ever. I don't call people to prospect. You know, I treat them well, or I advertise and get them to call me, you know, because they tend to have a higher level of motivation. I'm not saying that this is the right thing to do, right? I probably lose opportunity and waste money doing it, but I just don't have the time or patience to try to find the interested party. I want them to self-identify, and then I can sell to them. So,
One more thing.
yeah.
I'm so sorry.
Yeah.
How many directionals are you putting out?
None.
No.
None. I don't have, I'm not saying that's the answer, right? I'm not saying it's the right answer, right? I would either say, yeah, you could either do none, you could do 1 or 2 at the key intersections, or you could light up the whole town, right? If you do the 30 approach, like you're saying, like, I want everybody in town to know there's an open house, that's probably great for that seller that's mystery shopping. You know, you're also going to lose a lot of those signs because the neighbor's pissed, they throw them away or whatever. I mean, to me, that's a whole different level of effort, right? Like, we could also door knock 2 days before, invite the neighbors, like, you know, so for us, we're honestly just doing it a little bit passively, right? Instead of making that, I just don't have any time, right? Like, I'm busy. But I'm not saying it's the right answer. Like Dave Hook, I could share with you guys his open house playbook where they do like a next level open house, right? Aaron does it, where he takes the 15-foot bow flags, whatever he has, like the day before, and like there's nobody that's going to not know. My theory for not doing it is, I don't really want an unmotivated person to come to the open house, because then it gets too crowded and I can't find out who the serious person is, right? The people that are motivated to buy a home are going to find the open house through Zillow. You know, like they're going to, you know. So now long term, like nurture, right? If you had 30 people in your open house instead of 8, you're going to get more exposure, maybe get more sales, but you have to be willing to nurture them, right? Like, I want the person that's closer to transacting to interact with me, not like the person that's like, hey, we're starting early, we might sell our house next fall. Like, I mean, that's a different business, right? Like, to work that right now, I don't have the systems or patience or time to work that customer, right? I want the one, I'm an impatient person, but anyhow, so this is an example of that, right? So like if you were going to do 24 deals a year at $10,000 GCI a pop, that would be gross income of 240. If you then spend 30,000 on cost of sales, that'd be 72K. Expenses would match that at 72K, and you'd be left with 96,000 profit. As a business owner, right? You would have also gotten paid as the agent that wrote the business. And the reason for that is, like I pay myself 40% commission if it's a team lead, meaning it came from one of our team's outbound initiatives. If it's a sphere lead, like they call it because I'm David Becker and they would have went with me regardless of who I work for, it's 60%, right? So that comes off the top. So I already got that. And the reason for that is like when we went to hire Aaron, we're like, okay, if we started working with if we stopped working with buyers, we would be able to pay somebody $100,000 a year to work with buyers, right? Based on what we've been paying ourselves. And I could eventually evolve and do the same thing with listings, saying if I want to do neither buyers or listings, if I want to just run the team, like based on the listings we did 50 listings, my listing income was 200,000, right? I could go to a listing agent, maybe even recruit somebody that's a listing guru from another team or something and say, look, I have an opportunity. I'm going to step aside from listings and hire you to do it. But if you just maintain what I did last year, you would make 200,000. Not to mention, you'll probably be more excited, kind of burn out. You have more time. Like you might actually put some gas on that and do better, right? Now I can be like out of production running the team. Dave took it to a whole nother level and hired somebody to run the team, right? So now he, in this example, might make the 96 or even a little bit less, but he's literally not doing anything. Like, so Drew Richmond, if you guys don't know, runs the Dave Hook team. Dave Hook has a call with her an hour a week. And I think strategically he attends maybe a client event every once in a while or something like that, just to still be the face. But he's got a $3 million GCI team that nets close to $1 million a year without working. You know, like that's the 7th level team if you read the MRA book, and he's the only one in the area that's done that. Maybe you could argue Joy Daniels did it, but I think she's still very active in this in the business too. But anybody have any questions on that? So taxes, obviously, I don't know, you're not required to pay quarterly, but I think you can get like interest and penalty if you don't pay quarterly. So you should get an accounting relationship with an accountant that will do quarterly filings, and then year end. Just you wouldn't want to make estimated payments. They're due about 2 weeks after the end of the quarter, each quarter. So that would be like middle of April for first quarter, middle of July, middle of October, that type of thing. We kind of already talked about that. And then obviously wealth building, once you have this stuff done, like if you can live off the income that you pay yourself to be an agent, then in theory, any of the business profit is going to be straight profit, right? That's where you can either splurge and go on vacation. You can buy a rental property, you can invest. The main reason why I talked Aaron into doing an LLC is to be able to contribute to retirement, right? When you have an LLC, when we were at Verizon, we had 401ks, right? Like we contributed and they did a 6% match. So for 6% of my money, I got 12% in a 401k. I can't touch that money till I'm 59 and a half, but to this day, that's a decent chunk of my retirement savings. So I worked there for 15 years. When you're self-employed, you can't do that until you make an LLC, and then you can. It's called SEP IRA, self-employed pension, I think self-employed pension, IRA. And you can actually contribute up to 25% of your gross income into the SEP IRA, and it's tax deductible for the business. So like in the $100,000 example, you can put $25,000 into retirement, and it's an expense to the business. Like that, it's as if you didn't earn that income. So it's going into retirement, tax deferred. You owe taxes on all of it when you withdraw it, but you should be in a lower tax bracket when you're 59 and a half or retired. But that's huge, 25%. Like I went from contributing 12 to being able to contribute up to 25. Now you have to have the discretionary income to be able to do it, So, last year, I think my agent income from my LLC was like 160,000. So I contributed like 40,000 to retirement. If you do that religiously for a decade or two and you get a decent return, like you're talking 7-figure retirement. So that's the advantage that we have. And then eventually once you reach age 50-ish, there's like catch-up contributions where you can actually do larger amounts and things like that. So that's one of the biggest hidden secrets. If you have the income, the true max on a SEP IRA contribution is insane. It's like 63,000 or something like that. 72,000. So now you'd have to have 4x that in income. So you'd have to have gross like 288. But if you had 288 income and you could live off of 288 minus 72, you could contribute 72,000 pre-tax. That's going to, accumulate interest and dividends pre-tax. Like in 10 years, you'd basically been a millionaire. You would have contributed 720,000. You have some gains along the way. Like that's how you get some serious retirement income. But you also don't want to be broke today to live for retirement. It may never come, right? What happens if you get struck by lightning and somebody else gets that money? So what questions do we have? I know I'm ignoring the Zoom, so let me check and see if there's anything in the chat. There's Sean. Hey, Sean. So let me see, share, copy link. There you go. And I'll get it out to you guys as well. So what else do we have here? Thanks for the acknowledgement. You're welcome, Angel. I have an LLC now and it's not active. What do you mean by that, Lori? It's not active. Like you're not using it, but it's active with the state, or it's like dormant? Probably she means that she had one from a previous venture and it's inactive. So yeah, that'd probably just be a call to the state, or you could even go in, just literally Google PA business search or PA business lookup and search for your LLC name, and you can see if it's active or not. I think you could just start using it if it is active, but you might want to make a phone call to verify. That's why Aaron's doing so well. What's the reference there, Sean?
You said you put a gun to his head.
Oh, okay. A proverbial gun. That wouldn't be appropriate. Can you share the slideshow? I did. Oh, sorry about the screen, but now you have the content. Valley Green Townhomes. Oh, that's the name of her LLC, I guess. But yeah, you could do a PA business lookup for that. Oh, the one I was talking about. Okay, gotcha. What kind of questions in the room? Let me get this out to you guys real quick while you're standing in front of me. But think of questions. Danielle, what's yours? Email? Like that? I lost all my cookies. What's your email, Rochelle?
Rochelle Low at,
1 L, 2 L's?
yeah, 2 L's, L-O-W at, yeah.
Okay. Arbo. Oh my God, I lost. Did I mess something up?
Yeah, mine says info.
Oh wow, look at that. That's not good. But she's in there, Tatiana. Like that? Dot. What's your email? Like that? Oh, you're really tricky. Okay. At KW? Okay. But what else we got? I'm happy to answer anything related, unrelated, whatever you got.
I don't know. Who was that gentleman at the end? 'Cause
Andrew Smith?
I don't know if you have him
Oh,
on.
he don't care about him.
Oh.
No, I'm just kidding. I also don't know his email address, so I'll send it to him. Sean, any questions, thoughts? Audrey, Letitia? Sean, you were, I know back your first go around, you were big into like the lid and the 30-30-40. Like what did I miss, or what can you add?
No, I think you nailed it. I did it a little bit differently where I do it. So essentially what I did, I use QuickBooks personally. And what I did was I took the profit and loss. The MREA in the back of the book, it has a chart of accounts. And I took that chart of accounts and just gave it to my accountant. And they uploaded it right onto that, like, you were showing Quicken and those different categories to send it to gas or to send it to this or whatever it may be. It's very easy to just hand it to your accountant or even just import it onto I can speak for QuickBooks. I don't know about Quicken. I assume it's pretty easy. And it makes it fairly easy. My cost of sale, I consider my cost of sale not lead generation, but the splits that I have with the brokerage, any of my transaction fees, anything like that. So I do it a little bit differently like that. But I think you did a great job as far as like, again, the point of this is knowing your numbers, and I think that that's the key thing. And so however you understand it, whatever language you want to put to it is great as long as you know those numbers. I think you nailed it, Dave.
Thank you. What he's talking about is, so Keller Inc., the website kellerinc.com is the publishing arm of Keller Williams. So any of the KW content, you can go in here, and the MRA book that he just held up, these are all like quick reference guides / like takeaways or like addendums to the book, right? So if you go to chart of accounts right here, that he gave this to his accountant, or you would set up your Quicken or your QuickBooks this way, right? So it literally gives you like a code, the category for income and expenses, and like you could either do it manually and put it in the spreadsheet, or you could design your Quicken or QuickBooks or Google Sheets to have those categories. So he just did that, so probably so that it was easier. Plus, it also, he's speaking the same language as the book and everything to use for benchmarks and comparisons. But there's other good content here on like there's like virtual book clubs and everything, like door knocking safety toolkit, right? All kinds of stuff. But
Can we go over the Ford model? We touched base on it the other day.
Chris is going to be better at that. Can you help?
Yeah, Ford, acronym for just getting in the conversation, mainly with people who you already know. So like you wouldn't want to use a Ford acronym for like a for sale by owner. It stands for family, occupation, recreation, so like hobbies, and then dreams and desires. And you're just going through a framework for a conversation with somebody that maybe you haven't spoken to in 6 months.
Right.
That's in your SOI. So what you'll do is when you're having that conversation, if you do it correctly, you'll take notes on which letter because everybody typically gravitates towards one or two. Some people might gravitate the conversation towards family or work or what their vacation is, whatever. Then I take notes on my people and what the conversations typically look like, because when I go back and call them in 3 months and do my quarterly board call, I know that this person gravitates towards work and family, so I can have an easier in with them and an easier conversation. So it's different from LP Mama. LP Mama is used to qualify a new lead, location, price, motivation,
Amount,
agent,
Oh.
mortgage, appointment, is for qualifying a new lead. But you don't want to use LP Mama for somebody that maybe you've already shown a few houses to, they fizzle off, you're getting back into it. You might use it a little bit, but and vice versa with Ford.
but do it naturally, like, right? You're calling me like, hey David, how's it been going?
Okay, yeah, so hey David.
Hey.
I know you, ring, ring, ring.
Hey Chris, hey, it's been a while.
Yeah, it has been a while. How have you been, David?
Pretty good. Nice weather today.
Yeah, absolutely. Beautiful day. I might, be lucky enough to hit a golf course this week. So, hey, just wanted to check in and, see how things are going.
Pretty good. Why do you ask?
So part of my commitment to my business and people who I connect with in the world of real estate is just to have a quarterly check-in. So during my quarterly check-in, I just like to touch base, see if there's anything we can do to assist you. If you happen to know of anybody that's looking at work, I might not get all that right up front,
but the guide is like, how's it going with your family? Anything new? Like, oh yeah, my daughter just started driving, and my son was sick with COVID or whatever. You're gonna learn things about it, but then occupation, anything new with the job, right? Oh yeah, I'm interviewing for a new job, right? I might be moving to Texas, right? There's a lead. Recreation, we're going on vacation again to the beach. Did you ever think about buying a beach house? Like, it just gives you a natural guide. I'm sure you can watch videos on it on how to make it more natural, but you see how good he is, right? Like, I mean, who can pull that off on the spot though? But
I think the key with role playing too, or with the Ford conversation, something that's worked really well for me is if you stalk your people a little bit and get an idea of what they're doing, like everybody's
social media, like, hey, I see you guys went to Disney last week. How was it? Like, and then we talked about that yesterday, where it's like, I see we are at Disney. How was it? Like, and then they're going to ask you at some point, well, how's it going for you? And you can say, oh, and that's where you go into asking for business, or I just switched to real estate last year, or whatever it may be. But
it's also strengthen a relationship and keep them on the phone as long as you can, and then I'm sorry, I keep interrupting.
You're good.
I don't always do it in the exact order either, like FORD, because if I see something on social media where they did just take their kids to,
you start with that.
I might start with that because it's a more natural, genuine intro they'd be like, so how's the family? Like, you know what I mean? Like, that's, the right people will resonate with that, but some people that you may have met once, that was a FISBO lead that you talked to 6 months ago, you know, you might not want to lead with family. You might want to lead with, how are things going with work? You know, I know you're really busy. When we spoke last, most recently, just wanted to check in. It's been 6 months. I know you're, got a demanding work schedule. You might want to lead with something different than that, but try to hit all four. Yeah.
Don't leave with the app. It sounds bad. The other thing is like, stop liking posts on Facebook, right? People are numb to a like. Like my birthday was yesterday, right? I don't know how many people liked it. I didn't even look at the likes. Like, but I went in last night, I had 106 comments. I responded to every comment, right? Like, and so like you have to, what's that? Yeah. You have to stand out from everybody else, right? Like, so, and maybe even a comment isn't good enough, right? Because I'll tell you, out of like 200 likes, there was 106 comments. There was probably 20 text messages and 2 phone calls. One was from my mom, right? Like, so like the phone call in that case is what stands out, like, right? Like, so how do you do something different than what everybody else is doing? Because otherwise you're just part of the noise, right? Like I don't look back 3 months from now when I want to find a new accountant and say, which accountant liked my birthday post? You know what I mean? Like that's just not how it works. So Dave Hook, disclaimer is Dave Hook's a little nuts, right? Like, so everything he does is to the nth degree. He has a 27-page guide on open houses, right? So take whatever portion is relevant in your world and maybe you'll learn from it. I can send this out to you as well. But he's also doing a training here next week. I would encourage you all to stay for that. It's right after the sales meeting, I think roughly 1 o'clock. He's going to talk about how to generate business in an AI driven world, right? Like as people are relying on AI and Google and nonverbal communications more, how do you stick out? Kind of like what I just talked about. But Dave Hook is, the ringleader of that $3 million business. They got an award last week at our regional awards meeting for selling 360 houses last year, right? There's nobody closer to the Central PA area to learn from than Dave. It's more relevant. So open house playbook, misunderstandings, things like that, how to pick the right open house, how to create marketing materials, how to market the home, how to host it, set out signs and arrive early, right? Like, so there's just a ton of detail in here. They're even recommending the time of 3 hours. I think it's too long, right? This is a little dated, but it's going to give you like 27 pages of content. When you get to the signs, that'll be interesting because I think Andrew was right where they put out like 20 or 30 signs. And what he'll tell you is 20 to 40 signs per open house. Now they also have like a courier to go out and do it for the agent, right? So stuff like that is helpful at scale. But he also says that he brings a small table, like a fold up table, like maybe like 18 inches by 3 feet or something. And he puts it obnoxiously close to the front door. Like you're almost blocking their entry without actually blocking them, and making them sign in right away. Because if you say, hey, when you get a chance, sign in, they won't do it. And you say at the request of the seller would like to know who came to their home today, right? Because now it's not me, it's the seller. I'm just doing them a service because they want to know who's in their home. That's a reasonable request, especially if they live in the home, who was through my home today, and get those sign-ins, start with that dummy example. But arrive early. It's super awkward when you get there at 12:58 and people are already waiting in line, right? You can barely get the lights on and the door unlocked. You're nervous and sweaty like Chris already. So get there early. If it's not your listing, maybe set up a preview showing at 12:30 or the day before, right? Like, just so you're knowledgeable with that house. Also open the blinds, turn the lights on, make it welcoming, maybe have a backup candle or air freshener in case there's some kind of odor. Like there's things that you'll learn, like a little open house toolkit. But this even talks about how to greet them, how to follow up with them, everything. Like it's 27 pages of content here, how to capture the lead, how to follow up afterwards. Most of these people are coming in Monday morning. They're calling those people, hey, I met you at the open house. Did you have any more thoughts on that house? If it didn't work for you, what didn't work about it? Can I set you up a custom search? Do you have a realtor? That type of conversation. But
so I have put forward, but I asked them, I said, if you can fill out your information for the sellers and then
kind of rate the house kind of thing.
Yeah, kind of rate the house. It's kind of something like they're really thinking about it, how much they like it, and then a 1 through 5 check mark, and then whatever it is. But I haven't had one person not want to fill it out and
cool.
take it along with them. They take it throughout the house, and
you could.
Their information, also know if they have an agent or not.
You could also do, you know how we're doing like the $1,000 cash giveaway, or you know, some of those raffles that go for like a long period of time, like put your name in at the end of the season. You could do something like that where, hey, each year I give away a $250 gift card, like, you know, put your information there, right? Like, it's a way to kind of trick them into giving you the authentic information, because they're going to have to give you the right name and email if they're going to win that prize. You also asked about what I brought, Danielle. I often bring like similar houses, like in that same neighborhood or that same criteria in the same school district, because in theory, if they're a bona fide buyer looking at this house, like the open house we did on Saturday, there was 2 other houses for sale in the same neighborhood. So I want information on those, because now they didn't even have open houses, but the last thing I wanted them to do is not buy mine and go and call that listing agent or the Zillow agent and go see the other home. Like, I've already had it where, hey, if you wait around till 3 and 40 minutes, I'm done here, I'll go show you the other home too. You know what I mean? Like, so you kind of assume that you're going to be their realtor. You know, but what are you guys' thoughts on the NAR? Like, the whole change with the commission? Like, are you guys, so somebody calls you, wants to look at houses, you're having the buyer consultation, you're talking about your fee, you're having them sign a buyer agency, right? I think honestly, you guys as newer people are doing a better job with it than our veterans, right? So I see sales coming through, and some of our top agents they're only doing it whatever the commission is that the listing agents offered, right? So you guys, because you're learning through PC or whatever, your confidence is higher. Aaron's doing a great job with it. Our commission rate is 2.9% for this year, right? It's actually up higher than it's ever been, because the default scenario almost every time is we get 2.5% with the agreement of sale, and we charge them 0.5%, right? So you're getting 3% on that sale, where that wasn't happening before. It was 2.5, occasional 2.75. You've got lucky a 3 every now and then, but that average was like 2.7. That difference alone of 0.2% extra adds up. You know, like all of a sudden it's thousands of dollars that you got. And what Aaron does is like, hey, there's 3 possible scenarios here when we find a house that's right for you. The first one is that the seller is willing to pay my entire fee and you don't owe anything. That they pay the 3%, you're off the hook, you don't owe anything. The second is they're not willing to pay anything, you owe the whole 3%. And the third and most common is that they're going to pay the lion's share of the commission. What we're commonly seeing in the marketplace is their seller's willing to pay 2.5%, in which case you'd only owe me 0.5%. 0.5% sounds like a very small number, right? So they're agreeable to that. It sounds a lot better than paying 3%. The seller's paying 5 times what they're paying, right? So it works out. And then what Aaron says, I hear him all the time say, which one do you think I've never had to do before? And he makes them guess, and it's the buyer paying all the commission. I've never had that happen before. We're always able to negotiate them to pay some, if not all, the commission. And that lets them kind of exhale and breathe and know that they're not on the hook for the whole 3%, you know? So, but we've seen people with a pay raise, and like I said, it adds up on a decent volume. You're making an extra few $100s for every sale. You know? Chris, is it your time?
Whenever you're done,
Okay.
I'm at your mercy, my friend.
Any other, I think we have technically 7 minutes. Any other questions? Did Sean have something?
Yeah, I sent you an email of a sign-in sheet that I use for open houses. I call it a scorecard. It should be in your email, but I hand it to them when they walk in, and then they're able to like give feedback on the house and give their information at the same time. And then I just get it back from them when they leave the house. And most people are willing to sign that in. The downfall, to your point earlier, is that I have seen people not fill in their email or their phone number, and they don't have that first person that filled it out before them to give me that information. But it's something that I've been trialing, and I've gotten good feedback. And then it also gives me good a connection point with the seller, because I start taking pictures of that scorecard and send it to them for the feedback as well.
Yeah. Hey, this is the buyer's feedback, not mine. So like, it means more. Is this loosely what you have, Jalen?
Yeah.
Something similar?
Almost the same.
Okay. All right. Thanks, Sean.
Yep.
I like the thing what you said about using the gift card or something too, like, hey, at the end of the month or every month I do a gift card, even if it's for $50 or, you know what I mean? I mean, you said for the year, do 200 or whatever.
Whatever. Yeah. It can
But then
be.
that way they're gonna pick the right information and they're more.
They have to give you the right information if they want a chance to win. Otherwise, you can't find them and give them the gift, you know? So what else? Anybody else on the call or in the room? Questions?
Can you send us that playbook?
Yes. I'll send you the Google link for it. I'll just reply to the first email that went out. I'll find it and then send it. I still have it up? I got way too much stuff going on. Sean, I guess I get the people on the call. I didn't, Sean, can you send me a screenshot of the participants on the call by chance? Let's text or email,
Yeah, I'll send
since
it.
he's tech savvy. I can do that. Yeah, it's right here. So let me just reply and then I'll add them in. Yeah, anything else? We're good? Chris, what's your topic?
I will also just interject real quick and let you guys know there is pizza for you guys right out here. So if you want to grab a slice before you, tune in for Chris's, there is food.
Can you guys, Angel, Audrey, Letitia, can you put your emails in the chat for me?
Yes.
All right, thanks for attending then. If there's nothing else, we'll end this. Appreciate you jumping on.
Thanks for the information.
Wait, we gotta put our email on first. Hold on. It was a great presentation, if we're still on.
Yeah.
This is Angel.
Yeah.
All right, I gotta put my
There's
email on.
Audrey and Angel. Got it. Okay, you'll all have both of these
Thank
things
you.
soon. You'll have the open house playbook and then the presentation for today. But thanks for jumping on.
Thank you. Have a good
Yes.
one. I want to get one free.